Welcome to our 7th episode of Your Money Life Coach on eRadio with me, Barbara Mandel. This is your weekly Wednesday inspiration to act and manage your money better. Last week, we touched on credit, life insurance, and your debt. Today, I want to focus on the different types of life insurance as well as what you should consider before entering into a policy. Before I go into the different types, I want to explain the purpose and the importance of life insurance. Life insurance is in essence an insurer taking a monthly premium to insure your life. This means that when you die, they will pay out the sum assured indicated on your policy schedule. Most people see this as a grudge purchase, as you may pay premiums that increase every year for a very long period of time, and you are not likely to see the outcome of the full value. This brings to the point the reason you take out life insurance. Life insurance is not for you. It's for your family and for the plans that you have for them. COVID-19 highlighted to us how quickly things can change, and the risk of you dying changed at an instant. It's for this reason that life insurance plays a valuable role in the foundations of your financial plan. There is no purpose for you having the best financial plan, creating the future you want for your family, and if you're no longer there, the plan falls flat. The first important thing to consider when you take out life insurance is the difference between underwritten and non-underwritten. Underwriting is the process where the insurance company takes your risk factors into consideration, such as your age, your gender, income, and your occupation, your qualifications, and your family history to help them assess the risk. They use this process to assess the risk they take on accurately, allowing them to keep their premiums low. In most instances, the life insurance company will require you to go for some medical assessments, including blood tests. Non-underwritten life insurance follows a minimum level of assessing the risk underwrite at claim stage, meaning they will only look at your risks, and in some instances, your claim might be declined due to pre-existing conditions. Non-underwritten life insurance is often more expensive as they are unable to assess the full risk up front. In either way, when you take out life insurance, it's important to read your policy schedules and understand your benefits and review when they will pay out. Another form of life insurance is accidental insurance. This will only pay out if you die in an accident. In some instances, this might be a great option, but you must remember if you die due to natural instances or illnesses, your accidental policy will not pay out. There are, however, some reasons you would look and use accidental benefits. For example, when someone is a driver, the risk of dying in an accident is higher, and it might be worth your while to consider accidental benefits on top of your normal life insurance to reduce your premiums. Life insurance has various funding patterns, known as premium patterns. Premium patterns will determine the future increases of your policy. Some premium patterns are more expensive initially, but in future increases are lower. These are commonly known as level premium patterns. You then get premium patterns that start off really affordable, but the future increases are quite steep and will increase as you age. This is often referred to as age-rated or age-adjusted premium patterns. Then there are some with a fixed percentage increase in your policy premium for life. These are normally known as compulsory premium patterns. Some insurance policies also have additional increases after a certain time frame. For instance, an additional 10% every 25 years. The increase on this might not sound high, but you could also have the instance where it's a 25% increase every 10 years. This increases over and above your normal premium increase of your policy, meaning that if your normal policy increase is 12% and you have reached the period where this compulsory increase enters, you could have an additional 10% over and above your normal increase, meaning a 22% increase. You must also remember that benefit increases are often over and above your normal policy increases. When your benefit increases, the insurance company calculates the premium of the increased cover according to the original premium pattern and your risk factors. If you only need life insurance for a short period of time, a cheaper premium pattern will work in your advantage. If you need your life insurance for longer periods of time, which most people do, This could end up with your policy being unaffordable to you, and your risk factors and health might have changed in such a way that you are unable to get new life insurance without auto-loading or being able to get cover at all. It's thus very important that you make the right decision when you select your premium pattern for your policy. The next factor of your life insurance policy is the exclusions. Exclusions is another way insurance companies manage risk. Exclusions will play a vital role in your claims process. For example, some policies have an exclusion that if you break any law, they have the right to refuse your claim. If you have one glass of wine or one beer too many at a party and you die in a car accident on your way home, the insurer might have the right to repudiate your claim. You will not be there to defend yourself, so it's especially important that you understand your exclusions on your life insurance policy and explain them to your family. Lastly, you need to consider the premium guarantee options. When things like worldwide pandemic becomes a reality, the risks to insurance companies increase significantly. At times like this, insurance companies reserve the right to increase your premium patterns by a certain maximum amount stated in your policy schedule, and will differ from the various insurance companies. Most insurance companies offer a guarantee to say that they will not increase your premiums for several years, other than the normal premium increases. This does come at additional premium, but will protect your policy for several years. Life insurance plays a critical role in your financial plan, protecting the future of your family that you are working so hard to build. Where your life insurance company offer you a cashback refund, there is often a higher premium or some conditions attached to it. So it's vital that you compare the products before you agree to one. There are many factors that can complicate a life insurance policy, and I always therefore recommend that you should use a professional financial advisor to help you navigate this minefield. That's it for me today. Be sure to tune in next week Wednesday at 3:20 here on eRadio, where I'll be discussing important aspects of your will. If you found this episode value, remember that all our episodes are available as a podcast on the eRadio website to share with others. Feel free to follow me on Facebook, Your Money Life Coach, for more tips on how to manage your money better, or you can visit our website at www.yourmoneylifecoach.co.za. Thanks for listening.